Okay, let's get going here. We're going to start our seminar pretty quick. How to navigate through Calgary's crazy real estate market. I know it's a crazy title, but the market has been a little bit crazy this year and last year with the multiple offers, with the selling over list, with the feeding frenzy on nice properties out there. We decided to write this or to do this seminar to give everybody insights on how to navigate through it and how to get through it with the best property you can at whatever price point you're at.
Yeah, and first of all, you have to look at what property range or what property type you're looking at and what finance range you have. So we always work backwards. We work out how much you could borrow from the bank, and then it's our job to place that money on the best property possible. Now, the best way to navigate through what's going on is sometimes to look, Tim, elsewhere. I mean, we're going into, and we said this earlier in the year, we've been going into areas that not that we would stay away from, we just didn't have to go into. There's parts of the Northeast that have really impressed us. And we've gone into even parts of Dover, Tim, where that would be one community that we weren't really investing a lot in, or Erin Woods is another one, or parts of Marlborough. We were up in Rundle and we were in Pine Ridge, and we couldn't believe how nice some of the streets were up there. And you know how good of an investment property you can get in those areas. And when you actually go in and compare buying up there, say, close to 600,000, Tim, or if you come closer to downtown, you're getting really a semi-detached home, whereas up there you can get a full 50-foot lot, 50 by 110, 120, huge double car garage. And you know what, you're getting more bang for your buck.
Yeah, so that's the first way to start navigating through the market is look outside of the traditional areas that we were looking at for rental properties over the last 5, 10, 15 years, because a lot of those communities are priced right out of the cash flow range. The prices are so high, the rents haven't kept up with them. You're not going to cash flow on those properties just because it's simply price.
Yeah.
All right. For real estate investors out there, before you start your navigation, we want to warn everybody that, real estate investing might look really easy, but it takes a lot of work. It takes a lot of work before you get started, and it takes a lot of work after you get started. So get ready to, do a lot of analysis because properties are going in multiple offers and our investors aren't getting the properties that they, the number one choice, the number two choice. They really, really have to analyze. So it takes a little bit of work these days to get the property that you want to put into your investment portfolio.
Yeah, and when you're running your analysis, you have to compare apples to apples. We always say this. If you read our book, Fearless Real Estate, that is huge in there, just because you have to understand that a property, say in a cul-de-sac, is going to achieve more rents than a property on a main road. And then it comes down to size and layout and how inviting the property is. So there's a lot of factors. But what Tim's getting at with this slide is that it's all about not timing the market, but timing in the market. And when you understand that, it starts to get easier, Tim. And this magic thing happens in real estate that we all love, is where what we're experiencing right now, you just get this growth that we're seeing right now, which is unbelievable. And if you're in the market, you stand to make that money. So we always kind of say it does get easier. And then basically what we've done over the years is we've actually used the equity in those properties, Tim, to go and buy more properties. So it does take time, and investors always run out of one or two things. We always say this: the ability to get financing. The banks, once you get to 5 or 6 homes, it gets harder to get mortgages. So we're looking at doing creative things like joint ventures and buying with other people, or getting into commercial where the banks are lending on the property itself, not really your financials. So there are different ways to go about it, but you have to start somewhere.
Yeah. And so the first thing you got to do is take stock of where you are. And like, as I've said, some people run out of capital, some people run out of financing. Well, you need to know exactly how much capital you have. Do you have cash? Do you have savings? Do you have RRSPs? Do you have equity in your home? Do you have equity in some of your rental properties? Is there access to that? And can you access it Have you spoken to a mortgage broker about the availability of it? So there's all these things that you need to do to find out exactly where you are financially before you even start. Or if you're already well into the real estate investment game, you got a number of properties, you need to know where you are financially all the time so that, when a good deal comes along and you want to acquire the next one, you know exactly where you are financially and you can take a run at it.
Yeah, and you need to set up a plan. Like we see people come to us all the time where if they want to we'll get into the planning stage, tips to show me. So, but that is key, Tim.
Yeah. Yeah. So also on the qualifying side, on the financing side, can you qualify for a mortgage? Azad spoke about JV partners just a little earlier on. If you can't qualify for a mortgage and you want to acquire more rental properties, well, you need to partner up with somebody who can. And what we've always said, and what's always said in the real estate investment game, is owning 50% of something is better than owning 100% of nothing. So if you have to take on partners because you're tapped out either cash wise or financing wise, you go ahead and do it. And that's how we acquired a lot of our properties in the past, is when we got to a certain level in our holdings, we couldn't qualify anymore. So we had to approach our sphere of influence, people we know, so that we could partner up with them and keep investing in more and more properties.
Yeah, and just one thing with the people that are self-employed, sometimes people come to us, Tim, and we've got to send them back and they've got to sort out their taxes. And unfortunately, to get a loan, that has to be done. And Danielle's very good at working with our self-employed investors to work out how much tax or how much income they have to claim to move them forward. So, you know what, sometimes people are in that situation, but there's other ways to get a mortgage as well. And it really comes down to the individual working out your situation and then helping you move forward.
Yeah, so getting a good picture, a snapshot of where you are in your financing, with your financing, goes a long way when we're in a market like we are right now, where you have to act fast if you see a good property come along. Otherwise, some other investor's going to snap it up. So when you have all your ducks in a row, you're ready to go with your financing, or you're ready to go bringing a partner in, it'll help you immensely to move on. All right. So as I tried to jump the gun a bit, talking about becoming the expert. Oh, where did it go here? Oh, even I jumped the gun there about that investment plan. Yeah. Okay. The second thing you got to do is become an expert in the real estate investment field. And that means you have to educate yourself. Mm-hmm. When we first started, what was one of the books that we read?
Rich Dad, Poor Dad.
Yeah. So with Rich Dad, Poor Dad, it got us excited about investing in real estate. And from there, it just took off.
Yeah. I mean, that book did change our lives. We went out and bought multiple properties after we read that. We've actually wrote our own book, which we'll showcase at the end of the presentation. But you know what? Just by being on this, you're one step ahead. 50% of success starts with just showing up. So you guys have showed up tonight. And you know what, by learning, especially for free, and that's why we started this. We were tired of some of those courses charging upwards of $20,000 to learn how to invest in real estate. I mean, you're educating yourself so when you do make that decision to move forward, you're 100% confident and comfortable with moving forward. And we believe that you need a team around you. It takes a team to get you there and a team to give you the support going forward, because things can pop up. But by educating yourself, getting into this game, Tim, anyone can do it. Like honestly, if you've read our book, I started off earning $10 an hour, Tim, and then went out and bought 6 houses that year, earning $10 as a chef in my first year as an investor. So if I could do it, I didn't even have, Tim, credit back then. Didn't even have the cash, and found out ways to go about it and make that happen.
Yeah, and going back to that Rich Dad Poor Dad book, a lot of the young people that we bump into today, they don't read books anymore. So listening to blogs or podcasts or watching YouTube videos, we highly recommend that. There's a ton of experts out there, but try and stick to the strategies that you're doing and the content that is relevant to your market. If you're investing in the Canadian market, stick to podcasts and YouTube channels that are relevant to there. If you're going investing in vacation properties in Costa Rica or something like that, then follow someone who has done it before down there, so you're not getting some false advice from just some lecturer who goes around lecturing for a real estate investment company. Clubs and groups, the Calgary Real Estate Investment Forum that you're on right now, through our meetup group, we have over 6,100 members now. So yeah, we've got 6,100 members that will pop in and out on these Zoom meetings every, if a topic is relevant to them. And you can pop questions into the chat there. Some of our investors may answer it, we may answer it, but you're part of a group when you watch these.
Yeah, which is awesome. Okay, now we're going to get to the plan.
Okay. Well, the bottom line on this slide first, we'll get to it before we get to the plan, is limit the amount you spend on real estate investment courses. When we first started, both Azad and I spent an exorbitant amount of money on all kinds of investment courses. And, we had all the tapes, we had the CDs, we had all the binders. Some of these courses, Azad's paid $17,000 for it. We were part of a group where we were paying $100 a month. And it was a 6-year term. So that ended up being a massive amount of money. And we didn't even really get much out of that other than we got to ask questions of some of the other members of the group. So be careful on how much you spend on some of these courses, because some of them could go for quite a bit of money and they might not have information that's relevant to your market.
Exactly.
Okay, let's move on to developing a real estate investment plan.
Yeah, and the thing about having a plan is it really boils down to where you're starting off. I mean, if you're renting right now, we love when we meet people that are renting, because we can start you off in a way that you can really get ahead really quickly. And what we mean by that is you could buy your first property, move into it, put 5% down, so you don't need a lot of cash when you're moving into a property. And then when you do decide to move out, that could become a rental property and you can move on to your next property. We have young people that come to us and they're house hacking. We love house hacking. House hacking is basically where you buy a property that's suited. You either live in the upstairs or the downstairs, and you're getting extra income from renting out the other suite. It is the best way. We've had investors, if you've been on our YouTube channel, we've had investors live for free and then save their money to go buy the next property. So it is a really, really good way to get ahead. But when you're deciding on and this is what we do with clients when they come in to see us, we work out a plan with them. The first question we're always asking, if they do own a property, is, are they happy where they live? And Tim, most people are happy where they live, but if they weren't, or they were happy to move on, we would actually use their current property as a rental property and then buy them something else, upgrade them into something else. Once again, because you don't need a lot of cash to upgrade into your own primary residence. So the thing with making a plan is that you have to stick with it. The amount of times that we've seen people try and dabble in multiple things, at the end of the day, it can really hurt them and then they don't even take action, Tim. We always kind of like people to buy and hold. I mean, it's not a sexy way of investing, but it's made us the most money. And that's simply buying a cash flowing property that you hold on to for multiple years. It could be a townhouse, it could be a condo, it could be a half duplex, it could be a single family home. But the key is to make sure that the rents cover all of the costs and that it can attract good tenants. And the mortgage is getting paid down over time.
And this plan can keep you accountable. And you can hold yourself accountable because you've written down your goals, you've written down the steps you're going to take to build your real estate investment empire. And if you're following that plan step by step, in conjunction with hanging around with like-minded people and investor-focused realtors and mortgage brokers and things like that, it's like a business plan. It's not like, it is a business plan. So you're running a side business of real estate investment, running some rental properties, or you're flipping or doing whatever strategy you want to do. And your business plan is keeping you accountable. You're following it. You're seeing the results because you've put them down on paper and you've planned for the future results.
Yeah, no, exactly. And taking action, Tim, we haven't talked about that. Like, once you have the plan, next step is to take action. And That's coming up on another slide too. But
That's always getting ahead.
yeah, I'm always getting ahead. But that's what we're here for, is to help people select that right property, and then
Let's
take
go
action.
right.
Let's go right. Taking action. And the best way to take action is by doing those first three steps. Once you're educated, you've got a plan, it's way easier than just jumping into it and buying something. You understand what's going to happen. I mean, Tim and I are running all of the analysis on every property we purchase for our clients to make sure that those numbers work. I mean, today we're negotiating on a property right now in Skyview Ranch, and we don't want to pay the list price, and we're in a hot market, but we're actually trying to get it for $20,000 to $25,000 less than the list price, because the numbers make sense at that price point.
Yeah, and part of taking action is picking your strategy. I mean, if you want to do Airbnb arbitrage or just have Airbnbs, stick with it. If you want to do buy and hold, stick with it. If you can do more than one strategy at the same time, but you'll find that over time you're better at one thing than you are the others. The stuff that has made us the most money over time has been the buy and holds. And most real estate investors will tell you that. But if you need to, if you need to make some more money to continue on buying the buy and holds, you may have to do some of the alternative investment strategies. You may have to do wholesaling. You may have to do rent to own or agreements for sale or the Airbnb arbitrage. If you have to do those strategies to boost your income, so you can buy more buy and hold properties, then you got to do it.
Yeah, and just quickly speaking for the new people out there, just about a few of these, strategies. Rent to own can be a great way to actually put money back in your pocket. Rent to own is where you're renting to a person and you're actually taking a deposit. A deposit can range from, we've seen from $2,000 all the way up to $50,000. So it could be huge. But the difference between rent to own, once the property's rented, you've got an agreed sale price at the end of the term. A term, Tim, we've seen as little as 1 year, and we've seen it up to 5 years. And it could go both ways with the agreed amount. The property could be worth, which we've seen in cases, the property could be worth actually more than the agreed price, or it could be worth less than the agreed price. We've seen it go both ways. So that's the only risk with a rent to own. But the best thing about that is you're charging them rent plus rent credits. So if the property is rented for $2,500, normally on a rent to own, you might charge $400 more. And then that extra income plus the deposit can be either taken as a discount off the purchase price at the end, or it could be built up for the rent to own person to actually use as a deposit to qualify for the property at the end. But most of the time, Tim, people are taking that money, the landlord's taking that money and just using that money, and it's a discount off the purchase price. Airbnb, we've heard over the years people making incredible money off Airbnb, and one of the ways to actually really succeed at Airbnb is doing Airbnb arbitrage, where you actually go and rent properties out there, and then you have the ability to put it on Airbnb. We have a whole session that we discuss how to go and do that, but it's a great way because you actually don't have to qualify for a mortgage. You can earn cash flow, which can in return help you build that up for deposit for one of your own homes.
Yeah, and the final line on this slide before we move on is don't overanalyze. What we see some investors doing is they get analysis paralysis. They analyze too much. They try to project down to 25, 30 years down the road. What we've done is we've really simplified the analysis. And when we go out and we look at investment properties, we can tell you within 5 minutes whether you're going to cash flow positive on that or negative, just by how much the price is. You can figure out your mortgage payment, what that's going to be. You know what the taxes are going to be. They'll be on your feature sheet. And if you know the rent for the particular market that you're in, particular neighborhood that you're in, particular building that you're in, if it's a condo, you can make that analysis very quickly. By all means, use whatever software you want to analyze your properties or your real estate investments, but don't overanalyze it, because we've seen people actually not do anything in real estate because all they do is analyze, analyze, and analyze. So take action. That's what we really, really want you to do.
Yeah, and if you're working with us, we're picking properties that we know are going to cash flow. We know that these properties are going to have, we aim for zero vacancy, so always rented. And how do we do that? Well, we go into different communities. Like if we're going into condos right now, condos are really, really hot because they're going to continue to go up. But there's certain types of condos we're more interested in. For example, we would go into what we like to call blue chip communities. These are communities with a Starbucks within walking distance or other restaurants and cafes. Lifestyle communities like Lowell Mount Royal or Bridgeland or Kensington. We love Kensington because you have the C train going through it and people can ride their bike to ride or walk to work. So Kensington is a great community, and we like these communities because there won't be an abundance of supply. What happened, and we've been doing this close to 20 years now. We know that Calgary suffered for a long time downtown just because we had too many condos sitting vacant. There was too many rental buildings going up. Tim, that would have been like 2012 onwards.
Yeah.
Yeah, there was so many buildings that were going up. They were all rental purpose built buildings. So we were saturated for a long time. And then what that did in return was it actually lowered the price points of these properties. And we're still not back to where we once were. Brand new 2-bedroom condos back in 2009. We're selling pre-construction for around 460,000, and Tim, they dipped all the way down to 340,000.
Yeah, it's quite a dramatic dip.
And now we're only back up to 420,000 for that same unit. So we're not even back to where Calgary once was. And the funny thing is, what's happening in Calgary is that the majority of properties that they're building right now are rental buildings. They're not building. We only know one high-rise downtown, down near the superstore down there in the East Village. That those condos are for sale. That's the only high-rise we know of. So you will see in the next 3 to 5 years more condo buildings going up. What they are trying to do, Tim, is the conversions.
Yeah,
the commercial building.
Sorry about the sirens going by. There's quite a few fire engines.
Yeah, it's actually next door.
Oh, is it?
Yeah. Don't worry, we're not burning down. But yeah, so we're going to see Calgary continue. They're going to be building more of these high rises, but we actually like to go into areas where there's low rises because then there's height restrictions and there won't be oversupply in those areas.
Okay, so where did the screen go? Got to bring it back. Okay. So the next thing we're going to talk about is this whole seminar is about the crazy market that we're in. And whenever a market goes haywire like it is, there's too much demand, not enough supply, prices go through the roof. Multiple offer situations come up, and we can tell you that this year alone, we've been in multiple offer situations. Well, this year and last year, like so the 18-month period there, we've been in more multiple offers than we have in our whole careers, just in that 18 months alone. So what do you do when you get into a multiple offer situation?
Yeah, so the first thing you can do is work with your deposit amount. That's the first thing we would look at. So the higher the deposit, the stronger.
Every fire engine in town is
yeah, it's crazy. The first thing you could do is work with your deposit amount. How high can you go? An average deposit, Tim, would be 5,000 to 10,000 on a say. Anything 400,000 below, that would be your average deposit. And then once you go over $500,000, it could creep up to $20,000. And then if we really want to be aggressive, we've done massive deposits just to show how serious we are. It could be upwards of 50K to just try and outbeat the other offers. The other thing is always working with the seller's possession date. At this stage, this type of market, you're just giving them what they want. It's very hard to negotiate outside of that these days, depending what the seller wants. And then your conditions, we know that we're getting our investors pre-approved. So we actually don't go in with the financing condition, which in return, you still have to have the ability for the appraiser to get into the property. So we want to stress this, that if you didn't have a finance condition, you still are still getting a mortgage. So the bank will still have to send an appraiser out 9 times out of 10 to appraise the property. And then that's where things can go a little bit sideways, Tim.
Well, or you can just throw a term in there in your purchase contract where the seller allows you to view the property a couple more times before possession, right? Normally you want to do that, a few days before possession to make sure the property has been altered in any way, but the first of the 2 times that are in that term can be within the conditional period.
Yeah. I mean, if you're buying as an investment, Tim, most of the properties that we're buying, people are moving into them. So they do go in multiple offers. And then, that's when it gets to the heartbreaking point, because people's emotions are on it. And I know you've got that at the bottom, Tim. We've seen some letters and stuff like that, which we'll get into, which can help your offer, which it has helped.
Yeah.
And what we've been doing this year, which, Tim, we've really never had to do. I think back in 2006, we were doing it a little bit with the escalation clauses. So I don't know, Tim, if you want to explain what an escalation clause is.
Okay, what a lot of the realtors are doing with they have very, very frustrated buyers. They've gone in to, written offers on 5, 10, 15 properties, and they've lost out on everyone. So they know for sure that their clients are qualified. They know their client's maximum price, and they know where the property is roughly going to settle out at. So what they will build into their purchase offer is they'll say, we're going to take this, our offer is at 500,000, but they'll have an escalation clause in there where it says, but the offer also includes a term where we will increase the purchase price to be $5,000 above the highest offer that comes in. So say there's 20 offers, they come in at 500,000, someone beats them out at 510, that clause kicks in and their purchase price now goes to 515. So they're automatically in the front position. Usually you top out somewhere, you add into that term up to, say, 525. But these escalation clauses, while they're legal, they're starting to cause frustration amongst people.
Yeah, and sometimes they don't work. Sometimes the escalation clause only goes to a max, and then someone just comes in with a higher offer, so they didn't get it. We actually just accepted, we just sold a property where there was an escalation clause, and that exact same thing didn't happen. They cut it off at a certain point, and another realtor just came in at a higher point. So we didn't even look at that. The other thing is conditions. If you can not have any conditions, that's going to be the best offer.
Yeah.
That just trumps everybody. Yeah. We have a client, Daniel, who, Tim, he said we wrote 18 offers for him, and all of them went into multiple offers. So 18 different properties.
Yeah, and that's all within the period of the last 8 months.
Yeah, he finally got one. But at the end of the day, you know what? He had conditions. He had a property inspection condition. That's all he had. His parents really wanted him to have that condition, and that's fine. It just meant that it was going to take a long time to get him sorted. He wanted a suited property that could be easily turned into a legal suite. We ended up buying him something in Aaron Woods. It went into multiple offers. We had a property inspection condition, which was really, really tight. I think it was just 3 days. And we had a large deposit, and we gave the sellers the possession date that they wanted. So he ended up getting awarded that property. Tim, why don't you talk to everyone about the new system? Tim got a condo on the weekend.
Yeah, so when we're talking about limiting your condition, you can also limit the time frame of your conditions. In a traditional market, you can go in there with a property inspection condition, a condominium document condition, a financing condition, and you can have those conditions go 3 weeks long. Mm-hmm. So that conditional period is your due diligence period. It's when you want to make sure the property is in, stable physical condition. You want to make sure that if it's a condominium, that the condominium documents show the financial stability of the condominium corporation, and that you can get your financing, or your client can get your financing. So what we do ahead of time is we talk to Danielle, and we have our clients talk to Danielle and make sure that their financing is rock solid. So they're not going to go out and buy a boat, you know, in the meantime, in the conditional period. They're not going to go get another credit card. They're not going to rack up some other bill. So while pre-approval is never a sure thing, we make it very, very close to it, because Danielle and the lenders know that when an mortgage application goes in for this client, it's almost a sure thing. What we do on the condominium document condition to shorten the time frame of that is we work with a company that can get that condominium document review done in 48 hours. So traditionally, those companies need 4 to 5 business days. So if you're writing an offer on Friday, you're not going to have your document review done until the following Friday, maybe a week the following Monday. So we shorten that right up, and it looks very good to the seller if they go, this person that's putting an offer in and I'm accepting this offer, their conditional period is only 3 or 4 days long. So even if they don't waive their conditions, I can throw the house on the market again in 3 days.
Yeah. And you know what? We have to stress this. There is no way we would buy a condo without a condo document condition. Even if there's been recent sales and we could talk to the realtor, we had a case just about a month ago where Tim put an offer in on a townhome. That was in Braeside, Tim? Was it Braeside? Oak Ridge, in Oak Ridge. And this building had been red flagged. And when a building gets red flagged by CMHC, they will not fund it. So if people are going in and putting
less than 20% down,
less than 20% down, they will not be able to get a mortgage. So we've seen condos just recently. That's how crazy the market is, going unconditional. And if someone doesn't have that 20% down, they're going to lose their deposit if they don't have any conditions and they've handed that deposit over. So we have to stress that when you're also buying a condo, you're buying into the condo management piece of that condo building and how well managed it's been. And we've seen, because we wrote an offer for Dan just over here, where a building last year, they had some water issues. I think they had a roof issue, and then they had some water issues on the stucco, and they had to dip into their reserve fund. And when we did our condo document review, the reserve fund was below the threshold that the banks like to see, or CMHC likes to see, and they would not fund on that condo building. And this was a top floor unit. We got a great deal. And because their reserve fund was so low, in the condo document review, it came out that there's going to be increasing condo fees and that there's going to be a special assessment as well. So we knew with Dan, our client, we knew he was already maxed out at what the condo fees were, and then having the headache of going forward, knowing the special assessments coming, that wasn't going to work out for him.
Yeah, that's okay. So the next thing on here is use a motion if you have to. This one doesn't work all the time, but it does work sometimes. If you're buying, say, a nice home that a little old lady lives in and she's lived there for the past 50 years, if you go in there with a letter that you intend to live there and you're going to take care of it just the way she has over the last 50 years, and you love the way that she's, done her gardening and stuff like that, if you use a motion to try and make your bid the winning bid, as long as you mean it, like, don't write a letter full of malarkey. But if you mean it, by all means, write a letter to the seller. We'll present it with the offer. And it does tug on the heartstrings of some sellers. We've won a couple of them this year by adding a letter to it. And, just if whatever it takes to help your bid be the winning bid, one of your multiple offers, you do it.
Yeah, I mean, that really helps when it comes down to both offers being very similar. And then you have that letter, it really can get you across the finish line, which is awesome. And so that's the kind of market we're in, Tim. With these multiple offers, we haven't seen it slow down. I mean, the problem is yes, inventory is coming up, but when the good ones come, they still go into multiple offers. And there's different segments of the market, like builders lots right now, with the CMHC MLI Select program, where builders can go in now and put 5% down and build properties. builders lots, and when we're talking lots that are in good communities, it could be Altadore, it could be Bowness, it could even be in Ogden, it could be anywhere. 50-foot lots by 110, 120, especially corner lots. Corner lots are going sight unseen, and the prices, we're paying upwards of $800,000 for a good lot that we could build on one day. And those properties just go into multiple offers, like they'll just continue to go into.
Yeah. So yeah, if they're in high demand and they have many different exit strategies, so the builders can build townhomes on them, they can build duplexes on them. Those ones will be in multiple offers, we think, for the foreseeable future.
Yeah.
Final thing is, don't get discouraged if your offer is not the one that the seller chooses. Like Daniel or Azad was talking about, our client Daniel, who wrote 18 offers before he got the property that he wanted. We've had that experience, maybe not 18, but a lot of our clients are writing offer after offer after offer. We cut them off at a certain point if it's a rental property, because we know the numbers won't work after that. So don't get discouraged if you have to write a few offers. You will eventually get what you want. We'll eventually find you the perfect rental property, no matter what property type it is. Just move on if you don't win, if you don't have the winning bid. Don't get too discouraged.
Yeah, the best thing, like the property we wrote an offer today, the best thing is to find properties that are slightly overpriced, and then reason with the realtor, and kind of go through the comps and kind of come to an agreement and get properties that way. We would rather not get into multiple offers, but it's always difficult when someone's moving into the property and they really want it. As investors, we're kind of, as Tim said, we're not emotional, and we always believe that, the deal of a lifetime comes around once a week.
Yeah.
I mean, you just got to be ready to go to get them.
Okay, should you pay over the list price? Our answer to that is it depends. Currently, a lot of realtors are pricing their properties in the market below market price just to attract the multiple offers. So in that situation, you're going to pay over the list price no matter what. We can usually identify those in 1 second if the realtor priced them below the market price. So if you can rely on us to tell you the straight goods about where it's priced in the market and where it should sell at. Couple of other things. Do the numbers work at a higher price? You've said that, as I have said this a million times to our clients.
I don't care about the price. A lot of people really stress over that. Yes, we all want a deal, I get it. But if the numbers are working and the property's cash flowing, and the other thing, the big factor is the state of the property. So, for example, we're working with a fellow today. We wrote an offer for him, and we were looking at older properties, and unfortunately, older suited properties all the way up to 650,000. And we've kind of worked out that, we should be looking at new product for him in newer communities. Just because, one, you're not going to have these big maintenance costs going forward because the properties are newer. And two, why would you go buy a 50-year-old property when you can get something within a few years old for the same price? Yes, they are out in newer communities, but some of these newer communities that we're going into, the young people want to live there. They want to live in these newer basement suites or newer properties. And it's taken us to go see these properties to realize that they're easy to rent out, and they demand a lot of rent as well.
Yeah. So second point there, are you emotionally attached to the property? When we're buying someone a home for them to live in, emotion usually does come into it. If someone sees their dream home on a dream lot in their dream community, they may be willing to pay over the list price just to get that property. So if you have an emotional attachment to that big particular house and you want to live in that, then there's no issue with paying a little bit more over list price, because in Calgary, you're going to make up that difference very, very quickly. But if it's a rental property, a property that you're going to use for revenue, we try not to get too emotionally attached to them, and we try to tell our clients to not get too emotionally attached to them, because it's a numbers game. You want it to cash flow or be cash flow neutral when you first start out, because it's an investment. It's a business that you're running. And if you run it at a loss for year after year after year, you'll get out of the game pretty quickly.
Yeah, for sure. Like at the end of the day, you want to get that right property that you're happy with. We always say that we want our investors to be proud of the properties they own. You want to definitely look after them. And if a property comes along that ticks all the boxes, I mean, we're in a property today, and you could just get the keys and rent it out straight away. And we love those types of properties, especially for someone that is it doesn't have the time to actually put in to the property to get it up to scratch. So it depends where you're at and what you're looking for. But these days, as we were saying, semi-detached, legally suited properties, they're hard, especially if it's got a garage. They're hard to get under 600,000 these days, and that's anywhere in the city. And that's if they come on the market. We were looking for suited properties, a semi-detached, and I think there was 4 in the whole city with suites in them, which is unbelievable. In a normal market, we would be able to go out and show somebody, 3 or 4 of these over, one showing.
Yeah, and they could pick the best one.
Yeah.
But now you're stuck with very low inventory. So do the numbers work? If they do work at the higher price, then maybe you have to pay that higher price.
Yeah.
And if you are paying that higher price, guess what? You're setting the market. The market price will be what somebody pays for it. If you pay a little bit higher than what they've listed at, you got to remember that's just a list price. What it actually sells for will be the market price.
Yeah.
Okay, the next slide here, how to sell in this market. We've been talking about it seminar after seminar after seminar that we're in a crazy market. Well, what if you have to sell a property? What if you want to, reduce your portfolio down to a few properties? What if you want to amalgamate down, have more equity and less properties? How do you sell a house in this market? Well, is now a good time to sell? Of course, it's a good time to sell because there is so little supply.
Yeah, and some people might have investment properties, and the interest rates are going to suddenly jump up. And if the numbers don't work, we've been studying the rental market, and we believe that rents are maxing out. Like, we've never seen rents like this. And Tim, you were talking about a family of 4 today living in a one-bedroom, renting a one-bedroom.
Yeah, one of our clients who just bought a property to move up to was renting, and in a one-bedroom condo. The one-bedroom condo beside them had a family of 4, an immigrant family of 4 living in a one-bedroom apartment. So when the rental market is like that, it's a good time to sell.
Yeah. So that's the best thing about selling in an up market, is that you don't have to go through with maybe staging or fixing up things. With the property, you could put it on and it will sell.
Yeah, and how do you price it? Do you want to sell it very, very, very fast? Then you price it very competitively. We've had people that need to get out of that property, use the cash for some other investment, and they need to do it quickly. Well, in a market like we're in right now, you can set your possession date as very, very close to the time that you put it on the market. We've seen properties have a possession date as low as 1 week.
Yeah.
Now that's puts a lot of stress on the lawyers to get the deal done and the land title done, but the seller can have their money in as little as 1 week after closing if things are lined up properly.
Yeah, and I guess we should talk about, should you sell? We just sold an investor, Mark and Tamara have been investing with us for a long time, and we just sold one of their bungalows in Spruce Cliff, and they're going to take that money and get into the townhouse market, because we know the townhouse market is going up 19% right now. So some people, don't want the hassle of having a big home or having a suite of property or something that they have to look after.
Yeah, and when you get into the townhouse and the condo market, there's less maintenance for the landlord to look after, because the condominium corporation looks after all of the exterior, the landscaping, the snow removal. So you don't have to put that on your tenants to shovel the sidewalks every time it snows. So getting out of a property to get into a different property type is one reason people are selling.
Yeah, so there's different segments of the market that is moving faster than others, and that townhouse market and condo market will continue, Tim, because the average price right now in Calgary is above where people that are starting out here in Calgary, maybe new to Canada or first-time home buyers, it's above where they can afford. So that condo market is definitely going to continue going in an upwards trend.
Yeah, and the final line there is, what are the most important factors to consider when you list your property for sale? in a crazy market like the one we're in, a lot of properties with problems sell. That we'll get into that a little bit later. But what do you need to do to sell your property to get the maximum price that you want? Well, the property has to look good. So even if it's a little older or a little dated on the inside, you still want it clean. You want the yard tidied up. You want things fixed. You don't want, you know, smoke detectors hanging down that we saw today in the property that we're in. You don't want broken windows. You want it to look good, clean, no matter what age it is, so that you will get the maximum price, even in it. You might even get more in a crazy market like now.
Yeah, no, exactly.
And back to the problem property. This is a great time to sell a problem property. What do we mean by a problem property? Well, it's a property that may have had, you know, an issue with it over the years that you've owned it, and you knew you couldn't sell it in a normal market because buyers were not looking for something like that.
Yeah, problem properties, there could be a problem with the retaining wall. We've seen that. There could be problems with the foundation. There could be water getting in. There could be, which all has to be disclosed, but at the end of the day, buyers don't have a choice. So they're just taking these properties on. They could be properties that just need a major renovation and you don't have the money to do it. Where you could sell it to a renovator and they take it on and they make their profit margin after that. So, you know what, selling a property that maybe is hard to rent out. We've had clients over the years. We've got one client I could talk about, Nico, who owns a condo in Sonalta where it's below grade and it's very dark in there. It's like a basement condo. That's basically what it is, right?
Yeah.
Half of it's below grade. The problem with those condos is 9 times out of 10, women probably won't rent it out because it's on the ground floor, and just for security reasons, it may be harder to rent out. So that would be a property, now that the market's gone up, that would be a property if it was in my portfolio to look at moving on with. And you know, when I started off, I used to own a lot of properties in the Northeast, and I live west of the city. So, you know, I didn't enjoy going all the way over there to look at those properties when I had to. So I could tell you now, my portfolio has 0 properties in the Northeast, just because it's further away from my home. Funny enough, that market is going crazy right now and will continue to go crazy as well. So, but you know what? I've sold properties just because it was far to drive to. So we want to stress that, you know, if there is a property that you don't like, this could be the time to get out.
Yeah, so selling in this market, it seems like it's very, very easy, but you still have to do certain things to get the maximum price. You can sell anything in any market, but as real estate investors, you want to get the maximum price you can when you have to sell an asset to use that money to buy something else. Okay, finally, how do you choose the right agent to ensure success, whether you're on the buy side or the sell side? Well, the first thing you need to do is get an investment-focused agent. Azad and I have been in this game we were investors for years before we even became realtors, and we've been helping real estate investors acquire properties and sell properties for 17 years now.
Yeah. You know what? At the end of the day, we always say this, we're not commission driven, we're results driven. And what do we mean by that? You know what? We want the best for our clients. We've had people come in, Tim, to our office, and we've told them not to sell a property. And that's happened a lot. We'll be the first ones to say, yeah, you know what? That's a good performing asset. Don't sell it. Hold on to it. We can see that market continuing and then maybe get out a few years down the road, or just hold on to it and don't sell, which is crazy. You know, at the end of the day, you want a realtor that is going to work with the tenants. This is huge when it comes to, for us, when we're selling investment properties. We know that you don't want to upset those tenants. You want to actually work with them. As I was saying earlier on, we actually get times off them for the first weekend of showings that we know that we could send multiple showings. So we listed a property in Minipore not long ago, and the tenant was being pretty difficult. I could honestly say that. Yeah. We only had a certain amount of time to get people in. We really only could sell this property over one weekend. We sold it, and I think it sold $80,000 above the list price. But we went in, we priced it aggressive with our investors, And then we worked with the tenants. We got time slots available. I think we had 60 showings in a 3-hour period or something. And we just put everybody in through that property. And then we had multiple offers and it sold that weekend. So you do have to work with the tenants, and the tenants have their lives as well. Like we just sold a property and a tenant called me after I scheduled all these showings and said her son was sick and wanted to cancel all of the showings. But because I was very nice to her and worked with her beforehand to get those time slots, she'd already agreed, and then she went over to family to spend, those 3 hours where the showings were going to happen. So you do have to work with the tenants. And then not only that, we do go into properties, Tim, where the tenant stuff is everywhere, and we actually tell our clients we have to move the tenants out before we list the property. So that could happen as well. It all depends on the state of the property.
Yeah. So does your agent belong to a network of investors? Azad and I have, like I said earlier in the seminar, we've developed this meetup group where we have over 6,100 investors in our network. And what we do a lot of the times when an investor wants to sell a rental property, they don't want it to hit the market. We will sell it to another investor. So, the transaction is very smooth, very quick, and it doesn't even disturb the tenants. So our network is so vast. We have so many clients that have rental properties that we can put deals together without markets hitting the MLS.
Yeah, which is great. I mean, the network we've created, that helps our sellers decide what they want to do. But to be honest, in this market, the way to achieve the best possible price is to put it out there on the open market in this current market.
Yeah, and we have access to so many real estate investment focused service providers. You saw Danielle earlier on the program here. We have our lawyers real estate focused, our accountant is real estate focused. We have tons and tons of relationships with tradespeople, with renovators, plumbers, electricians, you name it. Everyone in our network is real estate investment focused, and we can refer them to you, in a heartbeat. They're at our fingertips, and every one of our investors in our network has access to them.
Yeah, which is awesome. We got a question in the chat. If anyone else has a question, please put it in the chat. How about properties in new communities like Seaton, Mahogany? I believe there are a lot of pre-construction going on, especially condos and townhouses. So great question. You know what? You always have to look at the master plan. So you have to understand how many units are actually going into one of those communities. We like seeing the construction because we know building costs go up, we know land costs go up, we know labor costs go up. So no matter what, to build that same product right now, you know what, Tim, and we were just saying this, and we have to tell you guys, one thing to be wary about though is that we find the developers are building in the profits for next year. So if you're buying a property to flip out for next year, and we're involved in a development down in Okotoks right now, and we have seen the developers that they're building in those prices. So you just have to worry about that. We did have someone, I think he was from Toronto, Tim.
Yeah, he bought 2 or 3 pre-construction condos in the Northeast.
In Cornerstone, Redstone. And we just did our appraisals for him, and he had bought them last year, and now they're coming to completion in August, and they are below the price that he paid for them.
Yeah, he bought them a year ago. He wanted to flip them out as soon as he took possession.
Yeah.
But the market price is lower than what he paid for.
Yeah, and we were up in the Northeast today, and we could tell you there is a lot of building going on. So you really have to factor that in. And we were talking, Tim, the other day about Silverado. What's below Silverado? Creekside? Yeah, there's new communities. So, I know this question is referring to Seaton and Mahogany. We love it down there because you have the hospital. You have the anchor. That's a massive anchor, employment anchor down there that we know it's going to be easy to rent out. Now, somewhere like Creekside, we just don't know. We were looking at actually nice half duplexes. They're going for about $680,000, brand new, legally suited. but we just don't know what the demand is and what's going on around there yet to say that we're 100% sold on it. So answering your question, we would rather you be closer to an anchor like the hospital or a big commercial area that is going to fuel that area for many years to
Yeah,
come.
and you really, really have to do your due diligence when you're buying pre-construction. We were speaking the other day to an agent in our office who deals exclusively with pre-construction. He's got a relationship with every home builder in the city. And he was saying that right now is because supply is so limited, they're building so few new homes. I mean, it doesn't seem like it. It seems like there's a lot of construction going on, but relative to the population coming in, they're building so few homes that these builders they're factoring in the future profits. So if that thing should be selling at 660, they're factoring in the $20,000 that someone will flip it out at. So they're selling it for 680 right now.
Yeah.
Because of the limited supply. So be very careful if you're going to do this. We're not going to say don't do it, but make sure you talk to people in the industry who know the actual price of these.
Yeah, we got offered 2 units just last week I believe it was in Seaton for 610, right?
Yeah.
And they want $80,000 to put in a basement suite right now. So you're actually better off going to find those properties that are already built. They might be 3-4 years old. You could actually get them with the double car garage, a legal basement suite, landscape package, which is just as grass and a fence. But you can get it in the 660 range, which is cheaper than what they're building today. So just keep that in mind.
Yeah. Okay, so the final line there is your agent commission driven or results driven. We spoke about this earlier. The number one thing we want to see for our clients and our investors is results. We're paid by the seller. We're not paid by you when we go help you buy a property. So we want to see the results. That's what makes us, that's what increases our network is you're successful by using us as realtors, and then that's how we grow our network. So results driven realtor is the way to go.
Yeah.
Final thing, don't stop doing what you love. Don't quit your day job. This gentleman in the picture here, Mark, he's hilarious. He's a newfie who's working here in Fort Mac. He owns a number of properties in Calgary here, and then he's also got a rental back in the Maritimes. But he continues to work because he knows by having that job, it will help him qualify for his next rental property. His portfolio is not where he wants to be yet. He wants to keep acquiring more and more properties, and he needs that day job to help him qualify for the next property.
Yeah, I mean, he took action. Now he owns a bunch of real estate and has a young family. And he's just simply been following us for many years and now has made, just on his properties that he has, he's upwards of $500,000 in equity and can continue now, Tim, to fuel his desire to own more. So
yeah, and we often get asked, can I replace my income with the rents that I'm getting from my properties? You can. But it takes a long, long time. Like we said, it's time in the market. Once you've been investing and you've owned properties for a number of years, like a large number of years, then your cash flow can reach a certain point that can replace your income. But despite what a lot of those investment gurus say out there, it's not going to happen next year. So hang on to your day. This is the advice that we're going to give you is hang on to your day job until that cash flow is at a very, very comfortable point.
Yeah.
Okay, so that brings an end to our seminar, how to invest in Calgary's crazy real estate market. Hope you enjoyed it. For the new people out there, what we want to stress is we've got an online ebook that we wrote during COVID.
Yeah,
and it gives you the core fundamentals of how to invest in real estate. It's a great read. It's a quick read. It's not a very long book, but it's free. You can download it anytime you want, and it will give you all the information you need to get your real estate investing career started.
Yeah, we've got a question here. Can it happen in 5 years to own 5 to 10 properties as someone with a day job? Yes, it can definitely happen. It's just starting off on the right foot, making sure you get that first property that is the right one. You really want to start off with, getting from, if you're starting with condos, then moving on to suited properties. You want to actually boost up that cash flow. And if they are suited, we work with you to make them legal. Once they're legal, that will help you actually qualify for more rental properties because the banks now will use all of the rent collected as extra income. So it actually propels you to buy more. But it does start with one property. You should definitely read this book, 1 Million Reasons to Buy Real Estate. It goes through the core fundamentals of investing in real estate. It goes through the 3 rates of return. And then it goes through things like property cycles, which is very important to understand. And right now, Tim, we're at the top of the property cycle, and it's going to continue. And you need to understand what is driving this market with inventory levels being where they're at and how long it will continue.
Yeah.
Next thing is our book, Fearless Real Estate. This will cost you, it's $20 on our website. I put the website for both books in the chat, crewinvesting.com. Simply go there. You can order the book if you want to read it. This book, as we said, Rich Dad Poor Dad changed our lives many years ago. It was very motivational. This book actually gives you the meat and potatoes you need to actually take action and move forward with your real estate.
And it's got tons of our clients' stories in there. It showcases their success. So it's not all about Azad and myself. It's about what our clients have done and the successes they've had. And they're doing every strategy, real estate investment strategy out there. We showcase clients that are doing it. So if you want to do, one strategy as opposed to another, you can read about it in this book and read about how our clients have been successful at it.
Yeah, someone's asking if we do get together. We were doing in person, then the group kind of wants to do it online. We are trying to get to either a quarterly or an annual event where people will be together. Normally when we have our guest speakers, we like to actually have it down here in the office where people can come down and basically discuss with each other what they're doing, and then it's good for you to meet part of our team as well. The last thing here we actually want to discuss here is our membership. So this is great for people that have rental properties already. It does have over 100 hours of content. It's online. It goes through every strategy there is in investing in real estate, but we go in depth. So it goes through things like we were talking about, rent to owns, lease options, doing joint ventures, which really changed our lives. That's buying properties with, say, friends or family that you know. We go through how to put that together.
It's got our whole landlord kit in there, which it's also accompanied by all the forms, all the leases, all the move in, move out things, scripts that you need to screen your tenants with. So that landlord kit alone, we were asked to sell it online, but it's part of this $97 a month.
Yeah.
That landlord kit alone can save you over $6,000 in a year in landlord costs.
Yeah, so people who are doing it, they actually take this investing very seriously. And we can tell you that the people that do this membership end up owning multiple properties. And that is the aim. If it interests you, you can simply send us an email or check it out on crewinvesting.com as well. And if you want to see what our investors are up to, we're always posting on our YouTube channel. Please go over there. It's called Calgary Real Estate Wealth TV. You can find it easily by just Googling it. And you know what? You get to see what our investors are up to. We do property tours, we do case studies, we do
interviews.
We do our investment tip of the week on there, so you can go on and actually learn things. And then we do post some of our sessions on there so people can continue to learn when they can.
Yeah.
Someone's asking where is our office. We're actually down the corner of 8th Street and 13th Ave Southwest. We're right just off 17th Ave downtown. If anyone's coming down here to meet us, there's free parking in the back, and we're here daily.
Yeah. So there's our contact info. If you want to set up a one-on-one meeting with us, take that down, send us an email. It's the best way to get a hold of us. We can meet you in the office here during business hours or anywhere you like after business hours. If you want to find out where you are, where you want to take your investing career, just drop us a line. We'll be more than happy to meet with you and help out.
Yeah, and we are back on in 3 weeks. We're taking a little summertime vacation here, and then we're back in 3 weeks' time. We'll be posting that on Meetup tomorrow. And hopefully you liked what you saw tonight. Please go to work tomorrow and tell your friends about us. And we look forward to seeing you in
See you in 3 weeks. Good night, everybody.